Right, so we're going to kick off. We've got a very tight schedule. This is the May edition of the Blocksquare AMA X Spaces, and today we're focused on what most real estate tokenization projects still need to solve. So good morning, good afternoon, or good evening, wherever you are in the world. I'm Mark Takuti, your host today for this Blocksquare X Spaces AMA. We've got a great panel lined up for you. Going to come on to that shortly. Obviously, the topic is hot at the moment. This is not really going to be one of those hype discussions about whether tokenization works. We know the industry has proven that. There's a multitude of real estate tokenization use cases out there. But the bigger question now is really what needs to be done and solved for this market to really scale its sustainability and get mainstream adoption of real estate tokenization. So today, on today's panel, as ever, we've got Dennis, CEO from Blocksquare. We've got Kevin Goose, CEO from PropBase. Michael, co-founder from Shift. We've got Klaus, CEO from DigiShares, and we've got Jens from Landhive. It's got a great panel lined up. What I'm going to do, first of all, is to get a quick, brief intro from each of the panel today, a brief project overview, 1 minute each, and then we'll kick in onto today's session. So, first of all, as ever, Dennis, welcome back. It's been a while. Over to you.
Hi, Mark. Thanks for being part of this talk today. Hi, everyone who joined. Thanks for being here. Blocksquare, for those who don't know, is an infrastructure provider, especially focused on real estate tokenization. We've been around since 2018, around 200 million worth of real estate assets tokenized on the infrastructure, deployed marketplaces for more than 25 businesses worldwide. Very, very proud to be with other speakers from the industry and can't wait to hear what they have to say.
Great. Thank you, Dennis. Up next, Kevin.
Yeah, well, thank you for inviting me. So I'm Kevin Ghost, the CEO and founder of PropBase. For those of you also who don't know, PropBase is focusing on tokenization of real estate, predominantly in Southeast Asia. We have quite a few live technical products on the market. We already have, assets on chain, and tomorrow we're launching our 7th asset offering. So we're quite excited and happy to be on another panel with all of the speakers and everything. I know we've all met in person. I'm a big follower of DigiShares and Dennis and of Blocksquare and everything. So yeah, I'm excited for this AMA. So thanks.
Great to have you on again, Kenneth. Over to Michael from Shift.
Hello, everybody. Great to be here today. Thanks for having me. Michael, one of the co-founders of Shift. I'm on business development and commercialization. Happy to join the very interesting talk about real estate tokenization. We are not doing real estate tokenization, but I can definitely say what I see from the sidelines. And there's a lot going on and everything to do with RWA. So really happy to be here.
Great. Thank you very much. One of the OGs of the space, Klaus, CEO from DigiShares.
Hi, guys. I'm Mark. Thanks for inviting me here. My name is Klaus. I'm the CEO of DigiShares. We have been around also since 2018, developing white label infrastructure for tokenization. Got around 250 clients globally in more than 40 countries. That's it. Thanks for inviting me.
Thank you, Klaus. Another OG, Jens, great to catch up again from Landhive. Jens, just checking your mic check. Okay, so we may have we'll sort out Jen's little mic issue as we go along, and we'll come back and get him to do a quick intro later today as we kick on. Let's move into the first segment and what really hasn't been solved from real estate tokenization perspective. And I'm going to open this up to the entire panel because I think this is just a general question applicable to everyone here today, and the audience will really be keen to hear about it. But what do you think the industry still hasn't solved yet? Regulation, liquidity, investor trust, or sustainable marketplace demand, or any other areas of interest? Opening up to the entire panel.
Well, I'd love to hear from Klaus.
Yeah, I was looking for
Because
a way to.
yeah.
I was looking for a way to put up the hand. Or do we just jump in and speak?
Yeah, look, Mark Takuti here. I think, look, please just go ahead, jump in, and
Right.
we're going to keep this natural flowing. So go ahead, Klaus.
Yeah, thanks. I think as an industry, we've solved most of the problems actually,
I agree.
except distribution.
Yeah, correct.
Liquidity, I'm not sure we will solve really at any point of time, because real estate, I think, is doesn't necessarily need to be liquid and tradable, but we've solved the optionality of liquidity, right? So it's possible to make it liquid now. So if liquidity comes, then it's good. If it doesn't, then it's maybe because it wasn't needed. But distribution is not solved, and I think it's because we haven't connected the rails sufficiently well yet. So the issuers are not connected to the large distribution channels, investor relations companies, and so on. But it's happening as we speak.
Interesting. So sorry, go ahead.
Yeah, I agree. I mean, I think that most of the problems have been approached comparative to, I wasn't around in 2018 like Dennis, but 2023, it felt still like it was the hype kind of conversation, but now there's tons of great builders on this space. Technical teams are going at it, full time every day, solving problems. You've got lending, you've got, you've got, liquidity issues and distribution issues. I understand that. And one of the things I'd love to see in the next, maybe few years is, from a real estate tokenization perspective, really is just more high quality assets. And I think that's really what brings in the attractiveness. And so I hope that's one of the things that, one of the areas that can kind of continues to elaborate on is distribution. And then liquidity, I think also it's really interesting, Klaus, because you mentioned something which is kind of true, right? It's like real estate investment or real estate tokens maybe aren't necessarily meant to be traded, but people should be able to enter and exit their positions, right? So it's kind of a fine line. It's not like something high frequency that we see in the crypto spaces or other aspects. And so, but yeah, that's kind of, I guess I second Klaus's topics.
Yeah, no, fair enough. I mean, following on from that, really, if we look at liquidity versus what's happening kind of in reality. Oh, Dennis, was that you popping up your hand?
Go ahead. It's fine. I just wanted to add that I think both of these points are definitely true. I think in one of the spaces we had previously, we had discussed quite a lot about transparency and verifiability of data, and when it comes to real estate, that part is kind of important as well, because that transparency and the ability to really understand the underlying asset, because there's going to be tens of thousands or hundreds of thousands of different individual real estate assets tokenized, or portfolios, doesn't matter. They do need that underlying assurance. What's the valuation of the asset, for instance? And for instance, when you compare it to other real world assets that have reached broader adoption on chain, all of those have different price points, or at least different proponents of pricing them. So you have these different sources of valuating the same asset. While with real estate, that's not present. And I think there's going to be a convergence somewhere along the next couple of years where you have automated valuation model systems being able to work as independent oracles, serving the tokenized market and kind of offering various valuation metrics on the same asset. And when that becomes true, and let's say updated on a monthly basis at least, then that becomes a good reference point for retail to really be able to enter the market. Right now, I think we're still in the time where you will see more professional investors exploring the space than retail really being able to enter because of the lack of this data assurance and essentially the pricing of the underlying assets.
Thank you, Dennis. And I think we have Jens back online. Just testing your mic, Jens.
Yeah. Hi, can you guys hear me? Sorry about that. We have
Yeah, no problem. All good. Do you want to give a 1 minute intro
a quick
again to yourself?
tech
Yeah.
problem there. So Mark, thanks for having us here, and Dennis, good to see you again, and Klaus, good to see you as well. I'm CEO of Landhive. We're Swiss-based. We're an RWA platform enabling compliant yield-generating assets to be tokenized and financed on-chain. We've deployed some capital in a live UK property assets through a partnership with Blocksquare. And we're now scaling from stabilized real estate assets into tokenized development financing. And the idea being that global investors are looking for regulated income-producing real estate opportunities and flexible developer funding infrastructure. So that's a bit of a background. And just Dennis, just quickly on your comment there, making assets understandable. This is something I was going to talk about. I think there's a huge distinction there between a retail investor and a sophisticated investor as to how they understand the underlying. And the other point being is separating where the asset is based. So if we're looking at something in Asia versus the UK versus Europe, that valuation, whatever you're going to use as your valuation model, is going to change. So you have the property, you have the incomes, and you have the local jurisdictions. That needs to be translated into something that sort of inspires trust and that people can understand. And I think that's one of the barriers that we're facing in this sector. So yeah, that's a bit of a point on that.
Thank you. Thank you very much. And just before we move on from that, I mean, we touched on liquidity as well, but I mean, open question to the whole panel. There is at the moment very few active secondary markets today for real estate tokenization. We obviously know that there are out in Dubai, there is some sort of secondary trading, and there are a few other platforms globally that are doing some sort of secondary trading. But would we say liquidity is more of a narrative than a reality right now?
Yes. Yes, it is. There is just, 3-4 active exchanges globally trading tokenized securities, down from maybe 10 a few years ago, right? So obviously most of them failed. I think it's just incredibly hard to build up a trading venue, especially for real estate, which is not a very liquid asset, and restricting the trading venue to people with wallets and so on. I think it's not easy, right? So it's probably going to be the big exchanges, the Binances and so on, that will successfully do this eventually, and probably not with individual real estate properties, but with something similar to REITs. But then again, we give optionality, right? So each one of us, I'm sure, of us platform providers enable some kind of bulletin board marketplace trading on our platforms, which is sufficient, I think, to most.
Agree. So for the audience out there, Klaus, and the other panelists, what you're talking about is peer-to-peer trading, and the ability in some jurisdictions, such as the US, where you need to use that ATS broker-dealer, there is the ability to trade. And I think, I'll let other panelists jump in, but I think, maybe we might not see a high frequency trading of real estate tokenization, but we will surely see quite frequent secondary trade thing of real estate to make it feasible and commercial for everyone. I think we agree on that. Kevin, you were going to jump in?
Oh, yeah, sure. Yeah, I mean, from my experience, I agree with Klaus that, you obviously have the top 10, let's call them crypto exchanges, are going to be trading large REITs, right? So, because they have distribution solved, right? So, but then you have a bunch of platforms around the world, PropBase being one of them, maybe LandHive, maybe all the other builders in the United States. There's tons of great RWA tokenization platforms popping up in the United States. And what I love about it is the industry in and of itself, specific to the vertical of RWA tokenization, is it is evolving super fast. Each founder is approaching it in their own unique respective market that suits them and their platform of investors. And for us, because we tokenize individual single unit assets, we don't necessarily have, issues with liquidity. We don't have, issues with really distribution. But I think kind of as, each builder respective to their market and their region as they approach it, because it brings really good people to the space. And myself coming from prop tech almost entirely for a really long time, the prop tech also has really good people, right? Who are genuinely passionate about solving the problem, right? Which is really distribution, getting, real estate ownership into as many hands as possible. And I think that that's key because inherently it's good for the country, it's good for the infrastructure, it's good for property developers. And with that also comes, the pain points of valuation. We've all talked with tons and tons of property developers, and they obviously, if they look at tokenization, they might not looking at their easiest to sell assets. They're always looking at their hardest to sell assets because they can distribute them through other channels. So I think,
No, thank you, Kevin. That's a great insight there. Appreciate it. I'm sure the audience do as well. We're going to move on now to probably a third segment. Trying to move on because we got a tight schedule, but I want to move on to enforceability and trust. And Dennis, hopefully I can turn to you on this. It's probably a good question for you, specifically for Blocksquare, because they focused heavily on legally enforceable economic rights connected to real world land registration frameworks. Do you think this kind of enforceability becomes essential as the industry matures, especially for cross-border investors who may never physically see the underlying asset?
Yeah, I mean, the short answer for me is yes, but that's my biased view, of course. If we just step back, a bit on different models of how you bring real estate value on chain, there's obviously differences of how you achieve that, and the most common one is basically an SPV wrapper, and you tokenize the shares of that SPV, so you become a shareholder by basically holding tokens. What we wanted to achieve is a framework that doesn't give you a stake in the wrapper, but it gives you a stake directly in the asset, and that it's the stake is in that asset is basically has less requirement of you as an investor requiring to be involved in the management of the asset itself. At the same time, we wanted to produce a tokenization framework that legally creates a token that can be classified as a crypto asset as opposed to a MiFID II financial instrument. And that's something that we have achieved, and I think it's quite unique. And the uniqueness of it creates new opportunities of how these tokens can interact within the wider Web3 and DeFi ecosystem. And I think this is kind of a clear distinction between when you tokenize existing securities versus when you create a token that represents or economic rights, but it doesn't qualify as a financial instrument. Why? Because it doesn't trigger the requirements of a debt or equity financial instrument. And as such, it can live already today on a centralized exchange as Binance, for instance, if they would be open to listing such a token, of course, because it doesn't require the secondary market to have the licensing of a securities exchange, which, as Klaus mentioned, there were 10 in the past. Now we're down to 3, and obviously, the trend continues. So I think liquidity for this kind of tokenized economic rights is possible, really, in the sense of tradability. However, you as an investor in real estate, you still want to have enforceability. Enforceability that if things go wrong, you do have a direct attachment, a direct lien, or a direct course of action that impacts the asset owner. And it's not just impacting in a long and tedious litigation process, but it's a shorter legal proceeding that can push the property owner into a default, just like with any other financier, whether that's a private creditor or a senior lender. Doesn't matter, but the enforceability is similar. And I think that kind of then, when this becomes public knowledge, the framework becomes very clear and easy to understand. And when it's easy and clear to understand, then adoption comes as well. And I think, when you look at tokenization models around, whatever's going to survive a default, it's going to be the clear winner in the end.
Cool. Thank you very much, Dennis. Very interesting and insightful. That kind of leads us neatly on to the next segment, really to talk about SPVs, compliance and scalability. And I want to turn to Michael and bring you in here. Institutional tokenization often becomes incredibly complex with SPVs, legal wrappers, custodians, fragmented compliance, lawyers, etc. Do you think the current tokenization models are actually scalable as they are, or are we recreating traditional finance with extra blockchain steps?
Is that one for me?
Yeah. Shall I repeat again?
No, I did get the question. I wasn't sure if it's cool. Thank you.
Yeah, for you, Michael.
There are, I'd say, levels of tokenization. So wrapping an SPV or wrapping some tokens and creating an SPV is one system, which I think is very primitive. And I think as you see NASDAQ moving towards actual tokenization of stocks, we will get the prime broker on chain. And at that stage, maybe I won't be left with such a big job and I'll be pushed aside to do some smaller things, which is fine, as long as we get actual blockchain-based tokens and which are the real thing and not representation. Because I really feel that the mid stage that we're doing right now, it's just, let's say, an interim until the system is entirely blockchain-based. Hopefully, as I see real estate moving forward, I saw in the UAE that they're actually shifting the ledger system to the blockchain itself, and the taboo system, which, you mark down who is owning what, is going to be blockchain based. These are the kind of innovations that will actually push things forward, and not just wrappers, as you mentioned.
Yeah, interesting. You raised that, Michael. I know, Klaus, you spent some time in Dubai, and your firm DigiShares is doing a fair bit of work. Anything to add on from what Michael covered in terms of where blockchain is going in real estate?
I think the SPV model is underrated and criticized too much. Actually, I think it works pretty well in most jurisdictions, right? It still is, I think, what 99% of everyone is doing. And it's getting better year after year. I think more and more legal firms become familiar with it. And even though it's correct, you still have part of data and structure off chain, right? It still adds value. And I think that what they're doing in Dubai is not necessarily better longer term. That's an unpopular viewpoint, I think. But they're tokenizing the title deed, right? And they're doing a pilot project now with a couple of providers, and eventually it'll be opened up to other providers as well next year, I think. So they've created a new type of token, which is like a mix between a utility and a security token called an AVA token. And I think that it's not clearly defined or classified yet whether this token can be traded on Binance, for instance, and whether it can exist outside Dubai, right? So we are in fact creating new legal challenges and creating new categories for something that might not need it, creating new complications. But I think there is a real chance longer term that we could have title deed tokens be utility tokens, so there would be no yield, no rental income paid out, that could be traded on Coinbase and Binance, certainly in the countries where they exist and they have legal value, but also potentially longer term, once someone gets around to making a global standard, they could be traded across country borders. So yeah.
Ah, thank you, Klaus. Yeah, and Michael, to your point, I think you're right that there are different structures, as Klaus mentioned, and others coming up. I was in Saudi Arabia recently, and it was interesting to see how they're pushing their real estate tokenization in general. So I think outside of wrappers, we're seeing quite a few jurisdictions opening up and experimenting. I think over the coming years, we'll see where it lands. The best model overall. Okay, that's great. Great discussion. I'm sure the audience are thriving. And actually, just a point of that for the audience as well. If you find anything really interesting in these AMAs, X Spaces, please feel free to add some comments on our Twitter X Space feed, and we'll incorporate that into the next AMA X Spaces that we do to make it more interesting, and really get down to the points that you want to hear as well. Okay, now over to you, Jens. I know you had a bit of mic problem earlier on, but going to really move to another segment where speculation versus real assets, and kind of where you kind of feel Landhive is going as well. Do you think too many tokenization projects are launching speculative developments instead of stabilized income producing assets that investors can actually understand and trust?
Yeah, thanks, Mark. Yeah, I think one of the biggest mistakes the industry is making at the moment is assuming that tokenization itself creates this investor demand. And here I'm also talking from experience because, we did an asset in the UK. It doesn't. What it does, it creates access, but access by itself is not enough if the investors don't trust the underlying asset, the structure, and the cash flow. And this goes to Dennis's point about being able to value these assets. So this conversation around speculative developments versus real assets is super important, because not all investor demand is the same. And the other distinction, if we look at retail investors entering a tokenized real estate investment like an RWA, the strongest demand would be for stabilized income producing assets that they understand. They understand the property, the tenant, the occupancy, cash flow. These are tangible and predictable things. But I think what's super important is for building trust and long-term participation in this market, we need to be able to translate that story and that value. Because accredited investors and high net worth investors, they're behaving differently. They're willing to take on more development exposure if the project is properly vetted and structured and transparently managed, because they're looking for enhanced returns. So I think that distinction is super important, because a vetted development project is not the same as a speculative tokenization hype. And the problem is when the industry packages these speculative developments with weak structures, unclear rights, and unrealistic projections, the market, and then market them as stabilized assets. And that's where the investor trust breaks down. So in the crypto space, and this is a theme that I've been hammering on, retail investors were chasing crypto reward and speculation. The market is now moving towards fundamentals. So where does the yield come from? What's backing this? What rights do I have? And crucially, how do I exit? So real estate is uniquely positioned for this because it's producing real world income, real world value, but the tokenization will only work if the investors trust what sits behind the token. And this, to blockchain's point, is legal enforceability and transparency is super important. But ultimately, these tokens are just an interface. The actual value sits in the asset. And for me, that's the next stage. We need to be building markets where investors actually trust the underlying assets, not speculation packaged as infrastructure. So yeah, that's a bit of a background.
No, that's great. No, I really appreciate that. I mean, opening up that point to the rest of the panel, do you feel as the market matures, investors will move away from these speculative projects? And as Jen's kind of mentioned, in crypto, I think people were used to, the 20% yields back in Luna days. For real estate, please correct me if I'm wrong, especially Dennis, a traditional real estate kind of ROI, we're looking 8 to 12%. That would be pretty good in terms of yields. And if you've got any equity lumped in on a hybrid token, then there could be some, uplift as well. And as investors, highly sophisticated retail come in and actually start buying these tokens focused on real projects, my personal view, but do the panel believe this is where the market will start maturing?
I can hop in here. Yeah, I mean, from a prop-based perspective, we only dealt with built assets. I mean, we typically tokenize parts of hotels and resorts, namely in Southeast Asia, and these are generally operating, right? So it's a very simple business model, right? But as you get into, I don't know if you were saying speculative as in like pre-construction, but I'll have to tell you, I mean, my background is entirely prop tech and specifically real estate, and it's pre-construction projects are attractive for a lot of investors. I mean, specifically in Dubai, like a lot of projects are pre-sold over there before they're even built, and in some way, shape, or form, they're also guaranteeing or promising some yield. And you also have to figure out, well, if the building's not built, then where's the yield being generated? So I think that's an inherent problem. And when you come back to property developers, I mean, we're looking at, vetting them. I mean, they often maybe have to be publicly traded or 5 projects or 10 projects underneath their belt or in business for 15 to 25 years, something like this. That would be the safer play. But if it would be a new developer on a pre-construction project, which is their first project, I'd say that's probably not going to end up with a great storyline a few years down the road. And that's really where investor protection really has to come into place, right? So,
sure.
Yeah.
And I think for the rest of the panel as well, I think areas where blockchain can make a difference, especially in real estate, could be collateralization. So throwing that out to everyone as well. I guess as the market matures, there'll be other areas such as collateralization to come into that will engage with investors that aren't currently invested.
I have a short comment to add. I spoke to one of the leaders of the Crypto Valley in Switzerland yesterday, and he tells me that utility tokens and ICOs are essentially dead. So what is left is security tokens and payment tokens. So it's our time now, guys.
Klaus, the OG, has spoken. It is the RWA moment. I agree with him, but anyway, oh yeah, there we go. I was about to say, can we get any thumbs up? But there, I can see it going crazy as well. So now is the RWA moment. So Jens, you were going to jump in?
Yeah, I was, just to Kevin's point there, or actually in yours, Marcus, as well, the SPV structures, and already we're having the collateralization. You can attach that for, I've got a property development background. So by bringing vetted development projects to the market or finished projects that are collateralized and linked in terms of some kind of enforceability, that gives that inspires trust, that builds trust. And then if people are actually seeing cash flows in terms of yield payments distributed to them either at the beginning or during or at the end, then people will start saying, well, hey, this makes sense. You know, it's like I can hold this for 3 years. I know I'm going to get 8, 10, 12%, and I can park it. And at the end of it, when the development gets finished and the developer refinances, then I'll be paid out. Now that's where it's interesting, because it bridges everything from yield bearing assets all the way through to a property development. And in each case, they're getting exposure to yield, and in some case also capital appreciation on the assets. And that's what we need to be plugging from a market perspective.
It's a different risk model, though. I mean, when the asset's already built and performing compared to when the asset's not built yet.
Absolutely.
It's a different risk model entirely.
Yeah.
I mean, probably not so much in countries like France or Switzerland or the UK, but in emerging markets. You know?
Yeah, that's very true. I mean, this is what I, at the beginning said, look at your jurisdiction. If we're looking at a Swiss asset or a UK asset, it's a very different game. But what's interesting for what I see with you guys, Kevin, is the retail demand for this product seems so much stronger over there. If they're, is it because they're more speculative, or is it just because?
No, it's not. It's inherently. Well, that's a very good question. Inherently, real estate investment is the most, I think, from retail or even small funds. A large portion over here are largely heavily focused in real estate, right? But real estate in and of itself, from an ASEAN mindset, is very attractive, right? And you don't necessarily have the lending markets, traditional bank loans, necessarily where you can get or have access to that. So it's just another way of being able to access a yield performing asset. So like prop base, we tokenize parts of like a Ramada hotel or a Wyndham hotel, and they're already performing. People can go, and the hotel's fortunate for us. The tourism market in Thailand is I mean, it's amazing, right? So it's just growing year on year. And so, you have high occupancy through a lot of the, established hotels. And I think people, necessarily didn't particularly have access to that. And that's kind of where prop base really solved problems, is we took the main pain points from traditional real estate investment, which we all know the 6 or 7 taglines, and we wanted to particularly solve those problems first, and then be able to scale those later on. And I think for us that worked quite well. But I inherently think that real estate investment is good. And I have, in past businesses, I've been involved in a lot of pre-construction project sales, all that kind of stuff. We've done marketing campaigns for lots of the top property developers in Southeast Asia, and
Right.
yeah. So I mean, it's not bad, because when the building finishes, the price also significantly increased, which benefits the token holders.
Yeah, totally. Also, another one to drop in that's quite interesting here, and I've heard it banded about on quite a few client calls that I've been on recently, is cross-border real estate market. So, tokenization promises borderless investing, but legal enforcement still happens locally. How big of a challenge is that for scaling global real estate markets on chain? Opening it to the whole panel, but examples of this would be, a tokenization platform in Turkey, for instance. They're only allowed Turkish citizens, no one else globally. Dubai, still the same kind of restriction. Do you think that's going to be holding back real estate tokenization platforms in the markets for some time to come?
Mark, so I just wanted to jump in there, because there's 2 ways of looking at that. One, you're saying, in, say, the Turkish scenario, it's restrictive what they would tokenize. But
oh, sorry, I was. Oh, yeah.
But the other way around,
probably got that as well.
Is that Turkish investors could invest globally through RWA tokenization. So the strength of RWA in this case is if you're creating vetted assets in various markets and opening it up to global investors, that's the beauty of this. Because they can usually get assets and liquidity out where they're normally not allowed to. So I'm talking, say, from a South African perspective, because there's capital constraints.
Sure.
And I'm sure Turkey's the same. But they could still invest in a vetted project in Thailand or in Switzerland or in America. So, yeah.
Sure. I guess we still have, issues globally until we have a, global framework across a lot of, say, G20 jurisdictions and then some of the others. So, in Dubai, for instance, it's only UAE residents that can purchase these assets that kind of Klaus talked about, that Pripco Mint do on the land registry. It's not no one outside of the UAE, if you're non-resident, can purchase that. So that's one restriction that's out there that I think is obviously holding back the market there. Do the panel have any other views on this? Personally, I think it's going to take a couple more years to bed down regulations globally.
Yeah, I think it's going to be hard to get the world to agree what tokens are in a general sense, especially when it comes to when you tokenize real estate. It's so exotic that I think many jurisdictions and countries are going to look at it in a different way. Some will regulate it in the same way as crypto, and some will go more regulating it in a sense of securities laws, and then everything in between. And it's going to be a while until that gets its own regulation. Most probably it's always going to be pushed into one or the other drawer. And I think that is the main blocker then for really having this global liquidity when you look at retail adoption. When you come to more professional investor, those limitations are kind of really immediately not there anymore. It's much more global. The world is much more global for larger investors. That's for sure. And as the space progresses, I think all these larger investors will have the same ability to invest in cryptos as they have in more established securities markets. And that's just going to be a different flavor to a similar type of asset, or it's just the how it is wrapped or represented or legally enforced that changes, and that obviously.
Thank you, Dennis. I'm just double checking my connection. Can you hear me?
Yes, I think he has a
Okay,
problem
cool.
on his side.
I'm glad I didn't. I was about to go to my internet service provider
Hey, Mark,
and say, look,
can you hear me?
I also thought the same.
Well, I was about to say we need to take the internet on chain. Yeah. No problem. Sorry, Dennis. You back?
Not sure if you can.
Can
Can you hear me?
Yeah, we can hear you. We can hear you. Okay, I think Dennis, he's in and out. I think last thing I'll leave before we kind of do a closing out round is from my investment banking experience, over kind of 20 years, Credit Suisse, UBS, Santander, Citadel hedge funds. When we developed investment banking products, global regulations took years and years. I'm talking from 2008 all the way through to even 2022. But there were industry working groups, a big one called ISDA that would have DTCC and various big institutions on board. And I saw personally in investment banking over the years that standardized regulations will come. They generally start from the G20. They standardize, pretty much have the same regulations, but a few nuances around. And then, the other jurisdictions try and mirror that as much as possible and have some local differences. So I think for the RWA tokenized security market, I think it will come. I've seen it in the other industries. It just takes a bit of time to get standardization. Right, that was my input. So I think we're heading into the last 10 minutes. So it'll be good to do a final question to each of the speaker. And Michael, we haven't heard much from you, so I'm going to come to you first of all to give you the floor. But same question going to everyone. And also, Michael, if you want to add anything else from today's discussion, please feel free to take a couple of minutes out for that. But what is the biggest misconception the market still has about real estate tokenization today?
Interesting. I want to speak as an outsider because what we do at Shift is a bit different. And I have a lot of friends in the industry, and I myself come from a real estate background and have been CTO of a mortgage company in my past. And I want to ask you guys something, okay? Why do we still not have, I mean, yeah, we talked a lot about jurisdiction issues, but isn't there a possibility today to do a consolidated marketplace, which includes some countries and may disinclude some countries and may have issues with others? And, it's not crypto per se, as mentioned before, but where is this marketplace? Isn't that one of the stoppers, the biggest blockers from mass adoption? Because everybody needs real estate in their portfolio once they pass X, obviously. And then the question is, where and how do I buy it? Now, the thing is, I see everything like very, very in the very beginning and very immature still. And will this kind of marketplace, I send this back to you, will this kind of marketplace help? Am I just imagining? I mean, this is kind of my dream on the future of this.
It's really interesting because when you talk about marketplaces, I think, there's marketplace, property portals, right? You have the Zillows of the world, but they're dominant in the United States. And then you have, Southeast Asia has property gurus. You have Scout 24, I think, in Europe. And, every continent or every small region kind of has its cluster of countries that have one dominant marketplace. I think that's necessarily how the industry evolves. It doesn't follow the same round. Like, remember the disruption between the jobs class or the kind of the jobs boards or the recruiters, kind of the disruption between job hunting, where LinkedIn kind of took everything. But from a property portal perspective, it was largely fragmented by country, and then it was regionalized, where one player might expand to the next country, or Zillow might go into Canada, or Zillow might go into Mexico, or something like this. And I see that's kind of how the big kind of industry evolves, where there's kind of regional players executing based on their respective marketplace. And but my 2 cents is, I think, you said CTO. I mean, from a technical perspective, I'm deploying smart contracts almost every day, right? Either on testnet or devnet or something. But inherently, tokenization is a more efficient model than what is currently in there today, comparative to a securitized note. And I think that it is, it's the future. So I do see, Bitcoin, hitting 10 million, and I see that, tokenizing, most of the world, or most of the equities, bonds, T-bills, stocks, real estate, everything is kind of the direction that we go over the next 10 years. And happy to join many AMAs with everyone here talking about that progress.
Thank you. Thank you, Kevin. And 30 seconds closing note for PropBase overall after today's AMA.
Oh, yeah. I mean, if you're not familiar with PropBase, try it out. We have a massive community. We're very well known in the crypto Web3 space. We're very well known for just execution, right? So we've got tons and tons of products to mainnet. Building on the Aptos blockchain. So we could talk about chains as kind of being, barriers, right? There's not necessarily one chain for them all, although Ethereum is kind of looking always better and better. But yeah, I think for anyone who's listening, I mean, you guys are the ones out there looking for the best projects. You're obviously here in the middle of a bear market looking for AMAs. I think it's nice seeing founders and stuff just talk about products.
Great.
Bear markets are for building, and bull markets are for, I guess, where we can turn on the hype then.
Thank you, Kevin. Great to speak again.
Yeah.
Michael, before we wrap up on that, just a quick 30 seconds as well from a Shift perspective before we close out as well. Just in terms of what Shift is doing in the market. Any closing comments from you? Okay, I think either there we go. Michael, I was just going to give you a minute if you wanted to close out anything from a shift perspective. And I'll ask you that last question, but anything from shift? Okay, looks to be it. Michael's crying there. He's unable to speak. But what I would say from Michael is, please go and check out Shift's website. Reach out to me directly, can put you in touch with Michael. Or also, please follow him or Shift on X Spaces and their social media. Right, over to Landhive and Jen. Oh, yes, I just wanted to give you a quick 30 seconds on Shift before we close for today.
Yes, thank you very much. So we actually went live yesterday with our 6 leveraged ETFs that are a middle ground between kind of slow-moving spot assets and really crazy and dangerous, I'd say, perps. We have Tesla, long and short. We have SOX, or semiconductor basket,
Yeah,
long and short. And SPY. Could you hear me, guys?
Yeah, you cut out for a little bit, but you're back
All
now.
right.
Go for it.
So, Shift went live yesterday with its first 6 assets. These are leverage ETFs at the core, 100% backed by the asset itself, of course, and 24/7 available via Jupiter on Solana. Come visit Shift RWA to see what it's all about. Do a lot of research. That's what I recommend. But thank you very much for listening.
Great to have you, Michael. Thank you. Jens, over to you. One quick question to round up, and then anything from a Landhive perspective. But repeating the question, what's the biggest misconception the market still has about real estate tokenization today? Jens, over to you.
Yeah, thanks, Mark. The biggest misconception is that they still view it as either a timeshare or some kind of a fractional scheme that has no exit. So there's that. But I think I just wanted to leave with one thing is we're looking at cash flows, assets that we understand. These could be real estate assets. These could be commodity assets. These could be hotel assets. They're all the same. So different platforms are working on the same theory. The more we bring quality vetted assets to those platforms, the more the market will start investing in them. So Landhive is focused on UK property assets, but the UK at the moment is a difficult market. We are also looking at a Swiss asset and a Spanish asset, and we're also moving into real estate development funding as part of our platform. So have a look at the website, and it's been a pleasure being on the panel.
Great, thank you so much, Klaus. Same question and a roundup from a DigiShares perspective.
Yeah, it's been a great pleasure being on the panel. DigiShares is doing lots of stuff. We are seeing a large inflow of new clients, right? So a lot of real estate developers across the world that wants to tokenize their assets to become more digitized, more automated, more modernized, and have the option of liquidity and being able to fractionalize. But actually, I would say most of all, hopefully, seeing tokenization as a kind of infrastructure that makes things better and allow for new innovation to take place, new functionality to happen. So I think the industry overall is moving towards an infrastructure technology, which is, I think, what we've been expecting for many years, but it's finally starting to happen now. So we are getting invited into the machine room of both governments and large companies to look at how they can benefit from this new infrastructure, not as a thing in itself, but as an infrastructure behind or below the existing applications. I think that one other thing that is missing in the industry and is a barrier to adoption is that all of us are working on different chains and different protocols. So I want to highlight a new protocol that just came out as a standard, Ethereum standard, a few days ago, called ERC 7943. Of course, it's only for EVM chains, but it's backed by at least 30 or 40 companies, including some of our direct competitors. So everyone should look at it. It's free, open, independent, not controlled by any single vendor. So if you use it, you are not locked into any specific vendor's ecosystem. You can still move your tokens from one to another. I think that's one of the missing pieces. Thanks.
Thank you, Klaus. Really exciting on 7943 as well. Before we move to Dennis for some closing remarks from our Blocksquare perspective, and to answer that question, I think I just want to, because we're on the dot coming up to 6 p.m. in Dubai and obviously different times globally, I want to give a big thanks, starting off there with Klaus. Thank you very much, CEO of DigiShares, Kenneth Goose from PropBase, CEO there, Michael Barsi from Shift, co-founder. Really appreciate your input today, and also Jens. I wish I could pronounce your surname. I can do mine, but I'm going to try next time. But from Landhive, really appreciate your input. Great conversations today on there. So thank you very much to all of our panel. It was really great discussions. There is a replay today, so go back onto X and you'll find the replay. You can listen to this to your heart's content. But I will encourage the audience, please follow everyone on X, on LinkedIn and other social medias. You'll get some great alpha and interesting tokenization views from all different platforms. Now, I want to give a big thanks to Dennis, Julia, and the whole team at Blocksquare. A lot of thought and diligence goes into organizing these X Spaces. I think all the audience will agree. Feel free to give your thumbs up and a round of applause. I just talk here and smile, even though you can't see me. But the hard work, there's a lot of hard work that Julia does, getting all these questions, getting all the narratives there. The rest of the team there, too many to mention, but they do a lot of work behind the scenes, getting all these questions for me as well. So big thanks to Blocksquare. I think this will continue during the year. We'll have some great conversations to come up, great panelists. And as one of the panelists said, I think we're here. The RWA moment, especially in real estate, is here, and it's all there for us to take advantage to. So on that point, Dennis, over to you again. Thank you for hosting this today. But the one question that I'll ask the rest of them is, what is the biggest misconception the market still has about real estate tokenization today? And some final words from Blocksquare, our host today, about real estate tokenization.
Well, first of all, thanks, Mark, for once again moderating a great panel. Thanks for all the panelists to have joined us today with your thoughts. I hope you were able to get your time to express your thoughts and so forth properly and evenly distributed. I tried to put myself a bit on the side this time. Thank you so much to Julia for organizing, like Mark, you said. I think one of the main misconceptions around is, I think Klaus mentioned it, it was mentioned all around, is liquidity. The notion that because it's tokenized, it's need to be liquid instantly. And I think that understanding that real estate is such, increasing liquidity of real estate, it's already, if you can sell a stake in a said property in a couple of days, or maybe even a week or two, that's highly liquid for real estate. It's not for crypto, and that difference is the one that I think is actually the number one thing that is not helping us in terms of retail adoption. So it was mentioned as well, construction projects where the investment and the exit are very clear, because it's a buy and hold thing, and you exit in 2 years when there's a liquidity event for all the investors. And I think that's kind of a very promising market, as Jens mentioned, and as well Kevin. So I think understanding how real estate works in itself, and adjusting expectations on what real estate in tokenized form should be like, and what qualities it should have. I think that's kind of a thing that the retail market there needs to have. In terms of what we have been building for the past 8 years, and I can probably speak for Klaus as well, is like we have been solving one thing at a time. At first, there was no tech, so we built the tech. Then there was no legal frameworks, so we built the legal frameworks. Then there was no buyers, and here we are now. There's not many buyers for this product, and it's a bit attached to some of the issues that I mentioned, and it just doesn't fly with retail. On the other end, you had Bitcoin, which was adopted by retail first. You have the NFTs, which were adopted by retail first. You had the utility tokens and the ICOs, which were adopted by retail first. But with real estate, it seems that it's not a retail first product, not at least in the jurisdictions where most of us operate. Maybe in Southeast Asia it's different, and Kevin kind of hinted at that. But what I'm trying to say here is that if we're able to create a capital layer that sits on top, aggregates liquidity and capital for tokenized real estate portfolios, I think that's a direction that can unlock quite a lot of things and simplify the entrance of capital for more professional investors, maybe even institutional investors. And that's, I think, the missing piece that can then unlock liquidity, which is expected by retail as a standard, at least in crypto markets. And once you have that, then you have secondary markets, and then you have as well retail entering the space.
Thank you so much, Dennis. Much appreciated. So yeah, we're just over time, so we're going to wrap up there. There will be another X-Space AMA type Blocksquare event next month, so keep your eyes peeled to X for the date for that to come. Drop your comments into X as well if there's particular areas that you want covered. I know there were a couple of questions, unfortunately, I didn't get to. We'll try and cater for that next time as well. So apologies to the person that dropped those questions and didn't get a chance, but we'll either answer that on X or we'll wrap that up into the next session. Right, so look, the conversation around tokenized real estate, as you heard, is moving really away from hype to infrastructure, trust, and real-world execution from all the platforms today. And that's where the next phase of this industry will be built. I think even from, we're even seeing from a Coles perspective now, I think we've got Michael as well listening in today. We're seeing a real kind of shift away from hype, and people like Michael. I've seen the work that he's done in the industry. I think you're showing the way that we are moving into a different direction totally. So that's great. So good evening, good morning, good afternoon, wherever you're in the world. This is Mark Takuti on behalf of Blocksquare today. That's the May edition of this AMA coming to an end. Please listen to the replay. Keep safe out there, and I'm sure I'll see all of you again next month or somewhere else in the world. Take care.